With mortgage rates falling, inventory picking up a little bit, do you need to buy now? Do you need to get into the market? Or do you need to wait? Let's explore some ideas to help you make the best decision in 2025.
I believe that home ownership is the cornerstone to true financial success and something very unique here in the United States. I want to make sure you don't make mistakes that many people do, and I'm going to share some ideas. Do you buy now? Do you buy later? Do you wait? What's your plan? Let's dive in and see. Broad stroke heading out of 2024 into 2025, we are seeing interest rates in the early innings of starting to come down. A really interesting thing we're seeing at the same time, you're seeing inventories increase around the country. My opinion, the biggest issue over the last several years had not been interest rates, it's been a lack of inventory. Rates coming down, inventories coming up. As the Fed cuts interest rates, it doesn't necessarily mean that mortgage rates will follow. Mortgage rates typically follow and most closely follow the 10-year Treasury. Eventually, the 10-year Treasury and mortgages will follow, but there's not a direct correlation. We are definitely in a downward trend. It's taking a little bit longer than many expected. I think we become addicted as a country to the low interest rates we saw over the last several years. When we look at the current rates ending 24, heading into 25, these interest rates more closely represent a 35-year average, more so than those rates we saw a couple years ago in the 3s and the 4s. I feel like we're going to see a range in the 5 to 6 range for the better part of the foreseeable future. So knowing these changes are happening with interest rates, and if you believe like I do, we're going to be in this trend that rates are going to stabilize in this general area, what does this mean for you and home ownership and a possible future mortgage? So let's take a $400,000 mortgage as an example. A full 1 percentage point drop on a 30-year mortgage would save a consumer about $250. So let's put that into perspective. Here's what's really going to happen. As interest rates come down, more buyers are going to enter the market. Going back to what the real issue's been over the last several years, in my professional opinion, it wasn't as much interest rates as there was a lack of inventory. As rates come down, more people enter the market, driving house prices up. So while a $400,000 mortgage may save you $250 with the 1 percentage point drop, guess what happens when that house jumps $10,000, $20,000, $50,000? I think it's a fool's errand to chase interest rates. House prices in most markets, in my professional opinion, in 2025 are going to continue to rise for the foreseeable future. It is supply and demand. Lowering interest rates are going to drive up demand and shrink supply. So by now, we're in the near future, before interest rates continue to move down, while inventory is still high, is going to put you, the buyer, in a potential better spot when there's less buyers. What does that mean? It means potential of a lower purchase price. What else it means? It means potential of that seller assisting you in the funds that you need to buy a house. Maybe paying some closing costs, maybe paying to help you get a lower interest rate in this short period of time. These things are available when there's more inventory. When there's less inventory, they go away, and it turns back to a seller's market. Instead of right now at this window, it's more of a buyer's market, but that time is going to be limited. I recently just helped a client buy a 4-unit owner-occupied property. He is going to live in one of the units and rent the other 3 units out. He was able to negotiate to have the seller pay his closing costs, his prepaids, and also pay several $1,000s to get him an interest rate 2 percentage points lower the first year, 1 percentage point lower the second year.
And very high likelihood in the next couple years, an opportunity is going to come for that buyer to refinance to a lower interest rate, which should be coming in the next couple years. That lower interest rate for the client saved him $600 a month for the first 12 months, $300 a month for the next 12 months. On top of that, he didn't have to bring nearly $10,000 to pay for closing costs and prepaids. He bought that property with just 5% down. Had he waited, this wouldn't have been possible because other investors will come in and move into that property, driving the price higher, and the seller would not have been willing to make those negotiations to get that house sold right now. I had a similar thing happen last year at the exact same time. And I regret that I didn't push my friends and my clients to buy last year at the same time. I said I wasn't gonna do it again. I wouldn't let that time pass. But if you think you wanna wait, let's talk about some pros and why you may wanna wait. Interest rates should come down. As interest rates come down, there is a possibility that more buyers that also wanna sell will re-enter the market. Someone who is at a 3% or 4% mortgage isn't in a hurry to jump to something in the sixes. If we come down and we close the gap between the client's current mortgages and where a new mortgage is, there's a possibility that more inventory will come out and we will get a more stabilized market. That means more houses potentially for you to buy. Now, those people that are selling the home are also going to be in the market looking for new homes. So it may not work out, but that's probably the biggest possibility. Another pro is you may not have the funds right now. Giving yourself more time will allow you to execute the plan of buying a home. Save some funds, save aggressively with a clear target to buy down the road. I suggest picking a time and working aggressively towards that time frame. After listening to this, if you're ready to buy now or you think you want to wait, regardless of what it is, here's some things to think about right now to help get you ready. Number one, it's never too early to get pre-approved. Information is knowledge. Finding a true mortgage professional, even if you're not buying right now, to get a plan down the road. What does your credit look like? What options are available for you now? What options would be available if you made a couple changes? Maybe you paid a couple debts off. Maybe you put some more money aside for a down payment. Knowledge is information. The more you know right now, the better. Number two, identify the area that you want to be. This is going to stop you from making an impulse decision, kind of like the grocery store. You pick up the candy bar right there at the checkout. Where do you want to live? Where do you want to be? Is it a school district? Is it a geographic area? Is it proximity to work? Is it proximity to a new job you're looking at? Where do you want to be and what are your goals? Narrow in on a specific area and start tracking that data right now. The third one, beyond just down payment, I think it's really important to have a little extra money. And a little extra money for those unforeseen things that will happen in homeownership.
The water heater is broken.
Don't worry, Daddy'll fix it.
It might be a furnace. It might be an unexpected repair. It might be a fence for the backyard for your dog. Whatever that is, saving more than what you think you need will put you in a spot that when surprises come up, you're ready. So these are all ideas to put you in the best spot to make an educated decision, whether it's now or it's later. Being educated, knowing what you want, being ready to pounce when the time comes, take advantage, and you become the homeowner. That's all I have. I hope it was helpful. If you're looking for a mortgage professional that can help you around the country, I'd love to be a tool for you. If you found information helpful, I'd love to schedule an appointment to talk to you directly. Click on the calendar below to get on my schedule for a complimentary strategy call. No heavy sales pitch, anything else. I want to help you achieve your goals in 2025.